Good morning. All right. Good morning. Hope everybody had a fantastic weekend. Good morning. Good morning. And this, I'm hoping to be a very nice week with some movement and volatility. That was one hell of a reversal pattern last week. As you all know, Thursday, it looked like the markets were heading to new all-time highs. And on Friday, things got ugly. And well, guys, give me 1 second here. Okay, sorry about that. So, wide range bar, and we talked about this when this occurred. You know, intraday, it was a power uptrend, and we talked about whether this possibly could have been a top, a short-term top. I mean, this isn't an uptrend on the daily; it's an uptrend here on the weekly. So the benefit of the doubt goes with multiple time frame trend alignment always. That being said, when prices have been trending up for a while like this, and you get a wide range bar, it's a strong indication historically that at a minimum, momentum is going to slow. So Friday, pre-market, I talked about the possibility of a narrow range bar, you know, and if it was bullish, it would have stayed in the upper half. And these are the futures. So we know that the S&P Qs and the spiders gap down a bit. But anyway, you know, if this was going to be bullish, it would have stayed in the upper half and ideally in the upper third. Obviously, that didn't happen. And when buyers couldn't take control back, well, on the gap down and drive it right up, or by 10 o'clock, well, you know, they just ran for the exits and it continued all day. And then I guess around 2:30 or so, there was an attempt to take it higher that failed and markets went out at the lows. So where do we go from here? Well, with a pattern like this, the best it's going to do, unless some miracle happens, is go sideways. But this kind of a pattern creates a lot of uncertainty. It is at some resistance here. I mean, when it was up at the high at the time, I mean, there was no way to, you know, think it wasn't going up to the old high and to take it out. And then we would see what would happen. And so while it appeared to be a lower probability scenario of going down to the prior day's low, and especially to take it out, it happened. And one of the things I talked about on this time was that as this, well, here was an igniting bar, and as this went up, it kind of corrected along the way like a self-correcting uptrend. And here, you know, it accelerated, and I wouldn't define this as climactic by any means. It's not that far from the 20 or from where it started this little correction right here. Nonetheless, you know, we had, you know, wherever the blame's going to be here, you know, the inversion of the very short-term yield curves, the 3 to the 5, and the 3 to the 10 is like right there. And so this is at the beginning of the warning, and this leads to recession. And, you know, so that's what got prices, the worry of that. It wasn't even close to that back, you know, toward the end of last year. There was a lot of talk about that in China and all of that stuff. And then down it went. So based on this, you know, wide range bar down, maybe we get an inside day today. You know, the markets are holding up here. They come off the lows a little bit. The hourly's in a downtrend. It's at resistance. So it really hasn't reversed this move down on the hourly chart. So the assumption is it's going to go lower from here. You know, somewhere could be all the way here, but before that, I mean, it already tested this area pre-market, those overlapping opens and closes, and it bounced off a little bit. But I think ultimately we have to look at this area down here. And as it comes down, the 50 MA will come up to converge with the 200. And so I would look at that as being a place where buyers would step up aggressively on a pullback. Now, that depth of that retracement will be pretty deep, but it still isn't going to break the trend on the weekly time frame or on this time frame unless it breaks down under this low. And so we'll just have to see. It's a long ways from getting there. And so step by step, you got an uptrend, you look where major support is, and look where minor support is. You look at how far prices retrace against it once you get a reversal. And then you assess the probability of whether it's going to violate the trend or continue this uptrend. So it's a powerful reversal signal. We'll see what it can produce. S&P futures a bit more bearish. And so as this went up, there was a topping tail. It took it out to break out above the highs and got slammed back down again. So more bars, topping tail, potent, powerful reversal. Suggests it's going lower. In pre-market here this morning, it looks the same, but weekly's in an uptrend as well. So I think the best that we can consider here on the bullish side is a sideways chop. Now we'll see what actually happens. Dow weaker, made a lower high. So you've got an M-top formation, not confirmed yet by breaking below here. Right? That swing low. But now this is what we need to see. If this breaks down through here, well, odds are the others, the best they're going to do is show relative strength and maybe not break as much. However, the Russell just got crushed on the reversal here. So we've got lower highs, now a lower low. It's into some support. So probability of stabilization here. We'll see what today brings. So far, it's not bouncing pre-market. And, this took out that resistance. So all of these powerful moves that happen post-Christmas into this high here are suggestive that while this is correcting, it should make a higher low because of the depth of this move here and the strength of this move. We'll see. Now, this inverted yield curve that's developing could certainly throw a wrench in that, even though it leads by a long time. But we just have to look at all the things to consider and then see what it actually does. So right now, I would say sellers are in control here. There's no doubt of that. Got a double M top here. It broke. It made a lower high. There was a sell set up there. And Thursday made this miracle move up that just got crushed on Friday. And so the transports are moving lower. And if you go back and look at times where the yield curve's inverted, this is what happens, meaning the transports deteriorate first. The markets still continue to hold up. Inversion happens. The transports will continue to move down, and there'll be plenty of warning signs along the way that'll say, be careful, tighten up your long-term positions, and many will get crushed as they always do because they just don't know. And the markets, before that happens, I'm sure we'll make another attempt to move up and make everyone think, probably including ourselves, that this market is going to ignore historical precedents and that, it's just the way it is. The market does its best to, keep you in the game for as long as possible, as if it had a brain, versus all of us just getting caught up in what's happening and buyers not wanting to give it up. So, even on Thursday, which put call ratio at 0.55, I was just, thinking this is just impossible to continue to move higher, but it's going higher. You can't fight what is. And then, the chickens came home to roost, so to speak. And Friday was the spanking that for the overzealous traders on Thursday that were falling all over themselves to get in the market. And so bonds just ripped higher, and they're up at resistance here. They're stalled, but you definitely want to keep an eye on this. And these are the futures. You don't have to watch the futures. You could just keep an eye on TBT, which I thought I had in here. So TBT is the ETF. Now TBT is yields going down, and that's what's going to invert the yield curve. TLT is bonds. So you can watch either one. If this continues going up or TBT down, those longer instruments, yield curves are going to invert, and we know what's going to happen. And gold kind of grinding its way up here, right? This had that powerful reversal down and it survived. So that's bullish, and gold's up here today. And obviously it looks like it can go back up and test these highs. Pretty sloppy kind of chop, tails, top, bottom, this one here. I don't like patterns like this because they're less, not unpredictable, but less predictable. Clearly this is going up. And so when you have patterns that are whippy in that way, you compress the data, you go to a higher time frame, and that should bring clarity. And if it doesn't, go to another time frame. And if that doesn't, just stay away. But this looks like it's going to grind higher. If it can get through this tail here, it should continue to go up. And oil continues this bull trend here. And energy, maybe this was just, kind of what I wrote over the weekend in the letter, a victim of the broader markets, because this was looking good. Oil looks good, but this came down with a pretty nasty bar. And there were a lot of breakout failures. Semiconductors, which looked great, breaking out to a new high, got slammed down. And by the way, retail just looks pretty terrible. Like that's going lower. So retail stocks are looking pretty bad. Technology, which was looking fantastic, and it still doesn't look too bad. We'll see if we get a red bar ignored, but it's right up against price resistance. So it makes sense that this would follow through to the downside, and we'll see some correction going on there. And internet as well, which broke out there, got slammed back down. So time to be cautious on the long side. We'll see how the short side develops, but the move that it's occurred here from post Christmas, this rally has been really strong, and this is only one day, a powerful day, but we'll see what it can bring over the next week or so. And I think that's it. I'm just looking at some stocks here. Looks like Tesla's getting a shellacking here again. So anyway, take it away, Dan.
Hey, good morning. How's everyone? Yeah, I didn't even know Greg got a new puppy until he told me this morning.
Yeah, it was a rough night last night. Anybody that's had a puppy, that first night when you bring them home and they're in a new environment and you try to contain them, a lot of crying and whining. So I didn't get much sleep last night. Good morning. Yeah.
All right, let's look at our opens. Yeah, too bad we didn't get into this IWM on Friday. Some of you took it. I think I gave it a verbal 10 or 15 minute low. CGC, ugly close. We legged into an iron condor on Friday. So no changes necessary. PYX, another pot stock. We have a put spread. MJ, we have a put spread, debit spread. It came in. We'll see if it's right here on support. The 20, we'll see if that holds. BXS. We are short stock, and we covered 2/3. We have another third we're trailing. BSX, we shorted stock under last Thursday's low. DRI, we have a put spread. We've tightened the stop and covered half. TTD, we have a put spread, ugly 2-bar reversal, hanging on by a thread here. Our stop is under 201. Boeing, we stopped out of early last week. That's still a mess. I mean, maybe we get a breakdown failure. If we can get over last week's high, that topping tail, then it looks good. It's gapping up here a little bit pre-market, but this, it's on the 200 and this, but gapping down and closing at the low from 1, 2, 3, 4, 5, 6, 7, 8, 9 days, ignoring this green bar. And that's not looking good. AMD, we have a covered call, and it came close to hitting our stop into the close. But if it does, it's still at a profit. Couple miscellaneous here. EPD, I'm still watching. That's nice strength. Echo Alpha is a bullish 1, 2, 3. Retraced Friday with the markets, but it's a 1, 2, 3 now. AC, we stopped out of at a gain, and we sold a third at the dead high on Thursday. BSI, let it set up for a couple days here, but all time frames I like. BDSI, nah, that's a deep retracement. Roku got on my list here today, both for a directional short and a call spread. That looks good. Cat looks lower, call spread. Greg looked at some of the sectors already. XBI, biotech, that's a call spread candidate. Yeah, Robert, I mentioned that it didn't hit the stop, but it looks bad. There were so many breakout failures on Friday. And, we said we were going to trade a couple of them. We kept tighter stops. We knew about the overbought internals. Tesla, we have on our list here for a call spread. But we, with the gap down, we're not going to get filled. Transports look lower. That's a great call spread candidate. Look at some gappers. This is a bull flag consolidation, CRIS. Well, it's gapping up to 270, so never mind. But that's a bullish consolidation. Bullish weekly, but I can't chase it with that gap up. This one, we're it was strong. That was a bullish gap there on earnings. I remember Trader saying a huge short interest. And the next day, I think Trader, or maybe the day after, I said, yeah, now it's stabilized. Gapping down here, 151. If the options are tight, we might be able to get off a fair call credit spread. Gapping up here, 1760. Wow, that's a big gap. That's a huge gap on the daily, but this 5-minute is holding very well. But if I were in that, I'd just be in total trail mode. I'm not thinking about entering that as a new trade. Pizza here, I just saw on the news that, I forget, that's some new investor and spokesperson. But maybe that news was out Friday, and I don't know if it was good news or not. Stock holders liked it, but that was a beautiful gap and a close in a weak market. That's a sign of being on its own page. This is a penny stock toy. Gapping up, not messing with that. VIAB. Wow, remember we shorted this thing on this beautiful 1, 2, 3. Look, that's just textbook I got to write a note to do a little, put that in my list of beautiful patterns. Now it's gapping up to 26.50 with a price void. That could be a beautiful day trade. I'll put that in this window right here. Mighty Mo could be a bearish 1, 2, 3. Sell setup on the weekly. Target, you know, this minor support area. So I like this. Gapping up to 88 bucks. There's nothing there. I think these are leftover already, but look, there's another no-brainer 1, 2, 3. So that on a bounce looks great. Look, and you got these tiny, you know, these tails. You got MAs rolling over. I got to put that on the same list. APTV. Wow, those are two beautiful. One, two, threes. Echo Alpha, we talked about. Tyson, I got that as a 1, 2, 3. Look at that beautiful thing. Inside bar doji, but it's a bullish inside bar doji. Pearl, big old mess. These are leftover now. KMX, kind of a 1, 2, 3, but it's at the top of the range. Fang, I had this on my list for a condor. And now we have a beautiful reversal on Friday, but the 110, 115, I was going to put it in the letter. And it was 25 days to expiration, and I think it was only like 45 cents. W here, big old M top. This looks great for day trade short. I'm going to put that in this window. And maybe swing. It's a counter trend trade, but that's a beautiful M top. Ralph Lauren here. I was going to put this as a bear call credit spread candidate. Beautiful topping tail here, wide range, closing under support, but it was just too spready. Same with MLM, M top, wide range, beautiful call spread candidate, but it was too spready. Same with ILMN, retest, potent reversal, major resistance. It was too spready. I mean, these were all great patterns. Sherwin-Williams, same, little breakout failure. I wanted to do a call spread, too spready, either too spready or not enough juice. Dollar General, we have as a call spread candidate. Well, actually, take that back. Short stock candidate. All right, trader, let me look. Tomo, 270. Not tier 1, but keep an eye on it. I'll put them in the list here. Now, I typed this one in my browser by accident over the weekend, and I said, "Whoa, this looks good." And I looked it up, and it's some mutual fund or some fund. It's, you know, trades kind of sloppy, but it looks higher on daily, weekly, monthly. There's the BIOS, there's Roku, Bib. I told you I was going to be watching for a while. You know, I like these crush stocks, particularly if they sell off for another 5, 6, 7 days. Then it gets more climactic. But when we looked at it, we said the monthly's damaged and it looks lower. All right, I'm done. 2 minutes early. Spiders breakout failure. I was looking for this for a call spread, but there was no juice. Look at a crack in here, pre-market 15-minute. So far we have continuation short bias. Amazon, that got climactic. We had a put spread in that, closed it in the strength. Netflix, we were in a condor and we got lucky and got out profitable. Apple green in a weak market. Intel, breakout failure, red bar, that's a call spread candidate. With the semis weak. NVIDIA, looks like we're getting our pullback. All right, I'm done. We're weakening here a little bit into the open. So our bearish bias continues.